Hey, what's up, guys? John here. 6 months ago, I got a knock on my door in my property here in Florida. It was to the HOA, and they said, here you go. You owe us almost $20,000 for these property upgrades. If you don't, we're going to put a lien on your property. And I said, why? What is this for? They said, well, the insurance company said if we don't do all of these new mandated upgrades to the roof and to the parking lot and all these different aspects of the property, they're going to drop the policy. So your portion is this near $20,000. I thought it was crazy. I thought it was absolutely crazy, and I put a video out talking about this. But now this is happening across condo buildings all throughout the state of Florida. For example, this lady here, 23-year-old woman, she's talking about how she just got hit with a $22,000 bill. And they said on top of this $22,000 bill, she is going to see a threefold increase on her HOA, and she's going to lose her home. Now, I talked to my friend also. He lives in Miami Beach, lives in a nice condo. And I said, has your HOA gone up? He's like, yeah, 40% in the last 2 years, 40%. But what if I were to tell you that a tidal wave is hitting the Florida housing market and it's set to land in the next couple months? And in this video, I'm going to show you exactly what this is, exactly what's coming to help you and prepare you for what I believe is going to be a major change for the Florida housing market. Florida has always been a boom-bust market. Things are either great or they're bad. Remember the great financial crisis? Well, what we're walking into is going to make that look like a nothing situation. Please hit the like button. Hit the like button. YouTube will share this content to educate more people about what's really going on in the Florida housing market and our economy. If you'd like to fix your credit to position yourself what I believe is going to be the greatest wealth transfer in American history, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item on your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free call for tomorrow, for Monday. Take a look at this. So this is shocking. In 2019, the average insurance premium, $1,988 a year. Average. Now, as of 2023, $6,000. What do you think it is for Q1 of 2024? The answer? $8,777. $8,777 is the new premium. So it's essentially increased 400% in about 4.5 to 5 years. 400%. What if I were to tell you that they are now saying that in premiums are going to be going to $11,759 a year. Basically $1,000 a month just for insurance for the average home in Florida. 184,000 views on this. Right? That's absolutely shocking. Absolutely shocking. And so when you look at what it costs to rent a basic one-bedroom apartment in Florida, if you're if you're not near the coast or you're not in one of these highly attractive areas, coastline cities with all the attractions, sure, you're going to pay a lot more there. But if you're somewhere kind of outward, you're looking $1,000, $1,500, $1,200 for some of these one-bedroom apartments in the state of Florida. And it's pretty shocking to the fact that what's going to happen to these homeowners? Who are these homeowners going to lean on? Landlords. They're going to rent. They're going to sell their homes. They're going to get away from these properties, and they're going to be forced to rent because every year that insurance goes up an extra $150, $200, $300 a month. It's not just the insurance. Property taxes are going up. Food prices are going up. Energy costs are going up. Everything is going up. Florida is a very expensive place to live. And so what I believe is going to happen is we're going to see people getting forced out of their homes all throughout the state of Florida. Forced out of it. I mean, right now they're saying home sellers are facing a summer from hell. This just came out a few days ago because people can't sell their homes. They go on Zillow, they'll see, oh, there's estimates saying my home is worth this, and this is what my home is worth. And my neighbors are listed for this, and so this is what the real estate market must be. It's not the truth. It is not the truth. The Zestimate is not the real value. I'm telling you, it's not the real value. In most cases, it's far from that real number. And when people list their homes for sale, they're finding this out the hard way. It's a bad situation. For example, right now the average mortgage payment nationally is $2,894 a month. $2,894 a month. So if you live in Florida and you have to add $1,000 to that figure, almost $4,000 a month for the basic home. Who can afford this? Who can afford this? According to Forbes magazine, 5 days ago, they said the average home in America was $495,000. $500,000, the average home. Mortgage rates right now, if you have perfect credit, 800 credit score, 7.2%. If you have the average credit score in America, 698, 7.9. So let's just say 7.5% is the mortgage rate, 7.5%. What this would look like if rates go up to $11,000, it would be, a $450,000 purchase price, not a $500,000 price. $450,000, it's $4,400. If insurance is $8,000, like what they're saying it is now, $4,200. If it's $6,000, which is if you live away from the coast, maybe you get lucky, you're $4,000 a month. $4,000 a month. This is if you're buying below the national average, right? Below the national average. Nobody can afford this. Nobody. Nobody with a $70,000, $80,000 a year job, which a couple years ago that was a good job. That was a good income. People would dream to hit $100,000 a year. They would say, I'm going to go to school for 4 years or 8 years. I'm going to make $100,000 a year. And you tell your friends this, and they would say, wow, if you did that, you'd be rich. You'd be successful. Now, $100,000 a year, you need to make 3 times this just to be able to afford the basis. So you maybe $12,000 a month, $144,000 a year. That's the average. That's the average. Whereas in 2007 and 2008, the national average on a monthly basis, $1,550 a month. That is affordable. That is affordable. Now, it's about 3 times that. This is and they say we're not in a housing bubble. How? How are we not? How is this sustainable? Back then, the average home price was $246,000. That was the average. So what I believe is going to happen, and back then, 6.4% mortgage, 2007, you could buy that $246,000 home, 20% down, 6.5%, you're $1,500. Even if you are putting 6% down for the same equation, you're at $1,800. But your premiums, they were less than $1,260. Back then, your premium was probably $700. It was probably $1,800, $1,500 to live in Florida. Cheap compared to what it is now. And that's why Florida, if you look at what's happening, they're losing their homes. They're losing their homes in droves right now. And they can't sell them. Because what's going to happen now is insurance companies are, they're ringing the bell. They're ringing the alarm bell, letting people know that rates are going to continue going up. And as rates continue to go up, people are looking at this a little bit differently. They're not looking at Florida as what Florida represented in 2021, which in 2021, Florida represented freedom, represented perfect place for business owners, a really, really affordable solution. If you live in New York, San Francisco, Los Angeles, Boston, you live in one of these expensive cities, it's an affordable solution where you can go from being a renter for $3,000, $4,000 a month in one of those cities to owning a home for the same price with no income tax. It's losing that appeal because, Florida has definitely went through a lot of changes and the world's going back to where, a lot of the people are trying to go back to where they initially moved from. Florida's in some really, really big trouble. On top of this, the landlords that bought the hype in 2020 and 2021 are getting absolutely smacked right now. And here's what I mean by that. The average cap rate back then, meaning if you paid all cash for your apartment building, was maybe a 4.5% or a 5% return. 4.5% to 5%. Most people did not pay all cash. And so what real estate investors did was they sold their buildings in a lot of these restrictive cities, where all the lockdowns and everything was, eviction moratoriums, a lot of things were very chaotic. They sold them. They overpaid for these properties, thinking that rents were going to continue to grow. And now rents have dropped 9.2% over the last year. 9.2%. So if they're buying this at a 5% yield or a 4.5% yield, and rents drop 9.2%, and insurance skyrockets, and borrowing costs go from 3% to 7 or 8%, what do you have? You have a disaster in the making. That's what you have. And what I believe is going to happen is we're going to see so many investors running into Florida in 2025 and 2026, paying all cash for these properties because that's going to be the only way to buy these deals soon. This is even according to Glenn Kelman, the CEO of Redfin, saying it's going to be nearly impossible to get insurance for Florida for homeowners. And so when you have this perfect storm, it's going to equate to a great opportunity for investors. They're going to be stepping in and buying these deals for pennies on the dollar. Because at the end of the day, what is a deal worth? What the highest bidder is willing to pay for it. That's what it's worth, and nothing less. The seller does not determine the sales price, the buyer does, especially when things hit the fan. And that's what it looks like. When sellers are forced out of a deal, it's what the highest bidder is going to pay for it. And I think this is what's unfolding right now in Florida. I don't think that this is the end. Them saying that 11,000, I mean, look at the trend. It doesn't take a genius to see it. It went from 1988 a year in 2019 to 6,000 to 8,000, almost 9,000, to where now they're saying 11,000 in 5 years. We could see a situation where the average is $15,000, $20,000 a year. We could see that over the next couple of years if this trend and trajectory continues. What do you think about this situation? How many people will be able to hold on? I believe, when you have so many people that own homes outright free and clear in Florida, they're going to reap the benefits of this because they're not going to have to pay these premiums. But those that don't are going to be in a really, really tough spot. I believe Florida is going to be a place for the rich investor, for the business owner, and for those that bought properties here 25, 30 years ago and have them paid off. What do you think about this entire situation? Drop below, let's have a conversation about this. And if you'd like to fix your credit to position yourself for what I believe is going to be a massive wealth transfer. I mean, look at this. Look at these numbers. Right here, multifamily delinquencies, surging. The average income, they say right here, the income a family needs for Florida is $209,000 is what they're saying. This is not factoring in for the new insurance premiums. How many people make that? How many people make this in Florida? I don't think so. Florida has always been a state where, it's been an affordable place to live. A lot of people on basic incomes live in Florida, not just the rich. Maybe along the coast, sure, it's the rich, but inside of the center of Florida, it's a lot of people making $30,000, $40,000 a year, $50,000 a year. Drop your comments below. Let's have a conversation about this. And if you'd like to fix your credit to position yourself, what I believe is going to be a massive wealth transfer, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, or closures, bankruptcies, repossessions, or any issue at all in your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free call for tomorrow, for Monday, and I'll catch you in the next video.